Today we're going to be talking about making data-driven decisions in the market. And I'm going to be showing you some cool information, at least I think it's cool. Using some software, using TradeStation. So first, before we get started, I want to use some information from you guys to make sure this is relevant for you. If I could have you share in the chat now an indicator that you have recently or currently have on your charts. Type in an indicator you currently have. I'm going to try to make this practical. Thank you very much. And then I think you guys can see my screen here. Yes, I got a Y. I'm going to call that a yes. Lots of indicators coming in. All right. So what I'm going to try to do is demonstrate to you today, and because this is a last-minute thing, I don't have a cool PowerPoint where I have my big point for the day or anything like that. So I'm just going to tell you what the big point is. The big point is there is a very common pattern in the market that some of you will already be aware of and some of you will not be aware of. But I hope to make it abundantly clear that there is a general rule of thumb in the market as far as accuracy and indicators go. And I'm going to type it in here, and I'm going to call it this. Anybody read or hear of the book or the principle, the 80-20 principle? Very common. It's a good book. I really enjoyed it. Richard Koch. So 80-20, very common, very known principle, repeated throughout. But in the markets, there's a little bit of a different principle, and I'm going to demonstrate it for you today. And I don't really call it this. I've noticed it to be this, about 65-35. And that is your probabilities of mean reversion versus trending, or momentum versus mean reversion. And regardless of the indicator you look at, the market you look at, the stock, the index, the time frame, weekly, daily, monthly, intraday, across the board, there is this common element to the market of 4x2. Yeah, we'll look at it all, assuming I have that data in this account here. 65-35 is what we're going to see a lot of the time. It'll be 60-40 sometimes. It'll rarely get any higher than 70. It'll rarely get really close to 50. You really start to have to manipulate different things to get to a 50%. So let me scroll back up and I'm going to look for some common indicators. Moving average comes up a lot. VWAP comes up a lot. Bollinger Band, RSI. MACD's there a lot, but it's kind of a pain to program, so I'm not going to do that. So I'm going to start with moving average, then we're going to look at a Bollinger Band. We'll just do that to begin with. So I'm going to look at a daily chart. And I am not, this isn't going to be a lesson on programming, but I am going to write the script for you so you can see exactly what is being done. That was the wrong button. What am I trying to do here? Like my platform is not organized like it typically is. Oh, come on. New. Why can't I find this thing? Development environment. Okay. So I'm going to write up some quick code here to test a moving average, and then we're going to test Bollinger Bands. We're going to test a bunch of things. We're going to test it on a bunch of stocks and a bunch of different indexes and Forex and all kinds of things. And we're going to watch this pattern develop, and you're going to start to realize that most indicators tell you very similar information. We're going to see some of them that work a little better than others. So we're going to call this moving average. Well, I'm going to call it the 65-35 test, because we're going to write a bunch of different things in there. Get rid of this. So if close is greater than average, close, and we'll just use a 10 for now, then buy this bar close, else sell this bar close, and then we're just going to reverse this. I can't click on anything correctly today. Then sell short. Oh, I already did that. Sell short. This bar close, else buy cover. So all this is doing now is it's creating a quick bit of script, 2 lines, that's going to show you what happens